Good morning, good afternoon, and good evening, wherever you are in the world. You are listening to Podias Grove of Signature FX. Signature FX is Andrew Ibrahim and yours truly, Podias Grove, and we are Signature FX. You're watching Gold Technical Analysis Episode 4, and thank you for watching. Let's get this over and done with quickly because I wanted to try and get 2 videos out today. I don't generally like to record videos on the weekend because you don't get market movement and the markets are closed. However, wanted to just get 2 videos in, one being a gold update, which is this one, just showing you what has changed since our previous post in episode 3, which was a gold technical analysis, posted and recorded on the 23rd of November. So let's have a look at what's been happening since then. But before we kick off, you know I like to start off with a quote, and the quote for episode 4 is, "Many of life's failures are people who did not realize how close they were to success when they gave up." And that's by none other than Mr. Thomas Edison. Okay, let's have a look first at US dollar. So the US dollar index, this is a monthly. We can see where we've come sort of since the new year, and it's been fairly bearish. If we get a little closer, we were looking at head and shoulders on the US dollar, and actually we can go up just a little bit. I was explaining the correlation between the US dollar and gold. And so for those of you who are, I guess, trying to understand why we're showing this US dollar analysis, what I guess essentially is the importance of this is this head and shoulders here. So if we move this out the way, and if this is the left inverse head and shoulders, this is the head of the inverse head and shoulders, and this is the right shoulder, this would be considered the neckline here. So we had a break of the neckline in the bullish direction, and then we had a break back down, and it looks like we're headed back down to these lows at around 91. I think the absolute low was 91.01, and that's where we're going to be headed. So as the US dollar depreciates, gold will inversely appreciate. So this is going in our direction. Our previous post, which was done on the 23rd of November, we would have been actually, yeah, 23rd of November, which would have been around here. Here we go. So we were around this area, and we said that this is going to look to depreciate and get lower and drop lower. So on the 23rd, we posted the video, and we've seen a nice little slight consolidation and resumption of the downtrend. Looking at gold fixings, and we can go into this further in further detail in subsequent videos, but this basically tells us what the fixes were for banks trading gold to one another. So on December 1st, the gold fixing was 12.77 in the morning and 12.75 in the afternoon. And we're gonna look at the chart soon. You can see we were up in the 1290s on the 23rd, and 24th we were at 1290 in the afternoon as well. So just looking at generally what the fixes are and where we have come from. Let's have a look at the chart. Okay, this is the gold dollar chart, and on the 23rd of November, which was the day of the episode 3 post for gold dollar, we were sitting comfortably around 1289, between 1289 and 1290. We said that we would purchase based off our analysis, and I do recommend going back and looking at episode 3. Based on our analysis, we would buy 1% of our account, so 1% volume at 1287. This is the actual market price right now, and we said that we were going to buy 1% of our account at 1275, and then we will have a 2% stop loss down at 1265. So enter 1% here, 1287, buy limit order. Enter 1% here at 1275, 1% buy limit order, and then 2% stop loss to exit the entire position at 1265. So you can see here did test here. We did actually get a trigger here. This is on the 23rd. We had entered our position, and then we got another test here and another test here. So it showed that it was a very strong support level, but we weren't finished yet because we got a nice run up to this 23.6 bullish 23.6 Fibonacci level. And then we got a fairly strong pull back down through and into our 1275. So on the 30th of November, we entered our second position, which was a 1% buy at 1275. And on Friday, just passed, we got a nice shoot up from 1275. So this is the closing price on Friday. So we've actually entered, our total position is 1% buy at 1287, 1% buy at 1275, which averaged out to 2% at 1281, and we still have our stop loss in place. Our stop loss has not been triggered at 1265. Please make sure to follow us on social media. We are present on Facebook with the Facebook name Signature FX. We also offer a absolutely free signal service, and the Facebook account for that is Free Forex Signals SFX, and it's completely free, just like this YouTube video, and our other videos are completely free. You can also watch what we're doing and follow our posts on Instagram. Our Instagram name is signature.fx. And of course, follow us on Twitter, SignatureFX. Thank you so much for watching, and until next time, happy trading.